Hello, everyone. Welcome to our Financially Forward Masterclass series. And this is the third module, which we are going to start from today onwards. And we've done two modules earlier, and two modules. One was related to money basics and daily finance. We did four sessions, basically about basics of money, like credit card swipes or budgeting, decoding your salary slip, and emergency fund. And then we came to another module, which was on savings and investment, where we talked about mutual funds. We talked about different kinds of funds like REITs, RDs, and FDs. And we also touched upon insurance. And also, the last session was an interesting one from the module two, which was about goal based savings. And today we are here with the new module, third module, which is related to career linked financial planning. And today's is a very interesting topic. Before we start, I will introduce myself. I'm Smita. I'm a chartered accountant and a coach. And today I'll be co hosting this session with Poonam. And let me hand it over to Poonam to begin the session.
Hello, everyone. Good evening. And greetings according to your time zone. So, today's session is about retirement ready and certain options of retirement. Like when we think of retirement, generally the government plan for their employees, for the government employees, it's planned. But when we talk about the private sector employees or the freelancer or those who are running their own business, self employed, yes, they need to plan themselves. So, what are the various options we will discuss in a while? But before that, let us ponder on one thing, that is today's session is retirement planning, retirement ready. So, retirement, as we understand, in the different norms, have different meaning. For government purpose, it's just a superannuation age of 58 or 60, as the case may be. But retirement is it's the stage of life. It's not the age of life. It's a stage of life where one start working full-time basis to earn the money and start spending off from the passive source of income or the indirect source of income. So we can say that it is not the age of retirement, it is the stage of retirement. I have seen people who retires at the age of 40, and I have also seen people who extend or who have to extend their retirement at the age of 65 or maybe till their health allows. So, retirement is what? Let's discuss this. So, retirement is the one. And if we plan for retirements, it's become freedom. And if we don't plan for it, it's become burden. So, retirement is only the financial aspects, or there are many other aspects. So, there are not only the financial aspects we generally used to think, but there are many, many aspects of retirement. And let me check from all of you that retirement is only about the financial planning or something else. From the audience, if any one of you would like to share your thoughts, retirement is about the only finances or other aspects.
Probably also about how to spend it, not financially, I mean, but how do we spend that time? How do I want to keep myself engaged during my retirement time? To think about that as well.
Beautiful. Uh, Anyone else? Smita, let's hear from you your thoughts, your views on the retirement planning.
Yeah, sure, I'll share. So, retirement is normally a phase of life when a person stops working or chooses to make a choice of not working. That's what is normal, the norm which we normally hear. But what I feel is it's a choice of a person when they want to do what they want to do in terms of earning money. Some people who are in, basically the retirement comes from a point when you're working in a job. So after 60, that is from the time the term came in. But like people who are freelancers who want to do something, there are people who say, I don't want retirement from my life. I want to do something till my last stage of life. So for those people, retirement doesn't come in. So it's all depends how this is a phase of life basically. Like we have childhood, then we have youth where you are taking care of your family, you're learning, and then after earning, you want to enjoy your life as well. So what I tell people is that looking at retirement as something which is a boring phase of life is not should not be the thing. You should be able to enjoy that phase of life where it is physically little less active than the earlier version of your life. You need to take care of your health. You need to take care of yourself little bit more. That's a phase I will normally say, and it's a time where you can enjoy all the passions which you have like kept it aside for yourself. And for that you need definitely need money, and for that to enjoy that phase of life, you're a little lighter on your burdens of taking care of your EMIs, taking care of going to office, taking care of families. All of this burden of making it happen on a rushed pace is going to come down. So in that phase you need to enjoy. So make sure that you plan for it in advance so that you're enjoying that phase of life as well. So it doesn't mean that compromise on your present for the compromising on for your future also. So it means having a balance, like in your present life, how you plan little things so that your retirement phase of life, which can be full of love, energy, and lot of activities and lot of passions and hobbies for you as well. So prepare for it for the joyful phase of life. That's what I will tell Poonam about retirement.
Great, great. Yes, Smita. And like most of us resonate with the same that we should start early. So retirement is not a retirement from the work. It's a many preparation when we say it's include many aspects like preparing for our health also. For example, we plan for finances, but we never thought about maintaining good health starting from right now so that when we are at that phase of life, we have the correct body or the healthy body to enjoy that phase of life as well. We need to plan for the skills that we will acquire at that of time, the hobbies we will pursue at that time, the financial, besides financial security, when we plan for the last stage, that's willing, that is making a will so that your near ones enjoy if anything is left with you. So planning all these things cover under this. So while planning not only the health, finance, inflation, and all the aspects one should consider, and Pavitra rightly said that this is one of the beautiful aspects. And just like few of my friends plan that when I retire, I will go to Goa. When I plan, I will start an NGO. Someone say when I will retire, I will start teaching to people. So everyone has that plan, so that is the part of the plan, and if we plan holistically more wider sums, then we really enjoy that phase of life, and that's the retirement planning is about. So that everyone has to think through and plan it. But let's talk about in this session about the financial planning. In financial planning, we have discussed in the earlier sections various topics through which we can invest our money and save our money. Now we are now specifying to the retirement planning. So retirement planning, there are options, EPFs, and many others. Let's talk about the private sector employees like us. Who were employed by an employer, where we contribute something from our pocket, employer contributes something, it get invested, and we get that amount at the time of retirement or max at the time of leaving off the job. So that is employees profit and fund, and we already discussed, just to recapitulate in brief, that whatever is the interest we get, it is tax free, and at the time of retirement we get a lump sum amount, and we get a pension, and the pension is taxable. This is all about. But few things that need to be kept in mind is the one that EPF is that we don't get when we switch the jobs, that the EPF should be transferred correctly to the, it should not be withdrawn immediately. It should be kept, if possible, if there is no urgent need, it should be transferred to the next employee account so that your money gets accumulated and it get the benefit of interest. If one has switched from one or two jobs, then all the PF numbers should be aligned to your PAN number, so that when you so that when you leave the job, you don't have the problem of mismatching your PF and PAN. Your PAN, Aadhaar, and everything should be linked. And you should check it periodically. Yes, that interest is credited accurately. And the most important thing, nomination is there. Because we are working so hard, our money is deposited here, and we need it suddenly. It won't happen that because of certain missing of documentation or the other requirements, we are not able to do it on time. So we just need to plan in advance. Uh, Smita, that's more about the thing about the private employees who maintain the EPF account, PF contribution. But there are people who are freelancer or they're self-employed. They also need to plan. So there are options available for them. Yes. So what all are the options which a person, if voluntary, want to contribute more towards these funds, or if they don't have their employees contributing for them, then what are the plans available and how they can contribute?
So Poonam, you mentioned about employee provident fund. So there's another thing, like in case you leave your corporate at an early age, or you want to take a break from your corporate, and if you are not employed for 3 years and you are starting to start your business as well, so after 3 years, the interest on PF doesn't get accumulated. So it's better to invest in the market. So the various savings and investments we talked about, that time those funds can be utilized. Just keep till 3 years, maximum 36 months, the amount in PF, and after that you can do whatever you want to, and you'll get a better return. And there are other things. So probably when you look at retirement, we always look at three things. One is your PF, and the pensions which you get, the EPS, which the employer deducts from the employee's share, and they will get it only later on. It's like a pension. And you have to, and also there is something called gratuity. These are the kind of things which, for a corporate employee, it becomes a part of it. Your PF and the gratuity, and EPS is never mentioned because it's an employee contribution, and you have to complete certain amount of years, and after that only you get a pension. So there's something called apart from that, there are things like NPS, National Pension Schemes, and there is also pension like Atal Pension Yojana, and there is something also very interestingly that PPF is also there. These are the things which we normally define as retiral benefits, basically. So NPS is like, again, you can get a benefit of ATC, another 50,000 of tax benefit in your regimes. And Atal Pension Yojana is something you have to subscribe to it before the age of 40 to get a pension from the age of 55 for the Atal APY. So these are the different schemes which are available, which anybody can use it. So like for example, I have taken a break from corporate. So if I don't get back to corporate in another next 3 years, what I can do is I can utilize my PF, and also I've invested in NPS every year. So I have the benefit of NPS. And also before the age of 40, I've started with the APY pension scheme, monthly schemes. So what happens is at the age of 55, I will get at least 5,000 as a pension income. And there are benefits of each of the items which is there, like PF, gratuity, NPS, and APY, because they're all basically planned for retirements. So, but apart from that, in case you have any plans to do, like if you have done a goal-based savings and all, that can also help you for your retirement. And these are the few things which he mentioned. But apart from that, if you want to retire early, how do you know your numbers? So like it's called fire number. You calculate your fire numbers well in advance to know how much you would need it. So for example, if you just have to calculate your monthly expenses and look it into 12 months and see how much yearly expense you have. There is a 4% rule that you will only be withdrawing 4% out of it, and then look at the number of years left for your retirement. Retirement doesn't mean 60, it could be 40, 25, whatever age you decide. Voluntary retirement can happen, and then calculate your numbers. And when you have that number and see with that number to withdraw 4% every year, what happens to that amount as well. So it gives you a clear picture where you stand and how much money you need. So when you look at your expenses throughout, you also calculate the expenses which you can incur once you stop working. So example, for your hobbies or anything you want to do, your travel you want to do, you can all calculate and see your numbers. So for example, a person like me who wants to have a travel life, on the go travel life, and have an occupation, like I'm a coach, so I will have a coaching business along with my travel as well. So I have an income. I have a stream from which I will not be taking a retirement from, but also I'll be enjoying my hobby of traveling, creativity, and etc. So I have taken care of and planned for it for my life. So this is how each one can plan for their hobbies, creativity, and see, look at what the expenses come in, and accordingly plan. Yeah, Poonam.
Yes. Any questions so far? Otherwise, we'll share more about the financial things of gratuity. Let me touch upon the gratuity. But Smita just discussed that gratuity is one component. Some maybe those who have recently joined, is everyone is entitled for gratuity. When we get the gratuity, maybe some of you have these questions. So gratuity is not the amount that every employee is entitled. Gratuity is, one is entitled for gratuity, one is, it's the ex gratia payment, is entitled only when one employee complete at least 5 years of services, continuous services with the same employer. And at the end of that period, if you, after the 5 years, if you leave the organization, then you are entitled for gratuity. And gratuity is above all your that's PF and all these things. And gratuity is calculated based on your last salary drawn. For example, you draw your last salary as rupees 1 lakh. So last salary drawn into the completed number of years services. For example, you have completed 5.6 years. So it will be rounded off to next. So 6 years would be considered 1 lakh into 6 into into 15 divided by 26. So this is just give a amount which is higher, slightly higher than one. For example, in this case, the six, it would be 6 lakh something instead of exactly 6 lakhs. This 15 divided by 26. So you get that gratuity. And if you work with various employers throughout your life, then total gratuity in your lifetime up to 20 lakh is exempt. On this 20 lakh, you don't have to pay any tax, but if it exceeds that, it will be added to your normal income and it will be subject to taxations.
I
This
think
is
for
about
government employee there is no tax. Nothing is taxable. I think government employees it's free. Yeah. So yeah. So
government
gratuity is
employees,
basically people. Yeah, it's basically for the corporate people, the private employees who are there.
private employees who are there.
Yeah.
And both schemes that is started by the government for NPS as well as the Atal Pension Yojana. And basically, NPS is organized for organized sector, and where the small unorganized sectors where they just want that their pension, there is a limit on the pension amount, that is it is up to 5,000 only max you can receive per month. So
Yeah.
if uh, so on the basis of that, there is premium. The premium amount is very small, and of course, the earlier you start, the smaller would be the premium. At the later stage of the of your career, if you start, the premium would be higher, and of course, the compounding effect will be there. Uh, so. In Atal Pension Yojana, the maximum pension you will get is only 5,000 per month. And if you
Yeah.
want to pay for a higher amount, then think of other options like NPS, like the mutual funds, like the SIP, or the other options that Smita mentioned, the gold and all these things. So we have to consider our ultimate goal, what we are looking for, how much is our current pension is we will get the pension, what other plans we have. For example, if one wants to start a business or one needs the bigger money after the retirement, then need to plan accordingly, save in the mutual funds and other options as well. If one has a lesser goal, just to maintain the life, and of course the pension would suffice. So it depends on your goal or requirement, what's you are planning for retirement.
So
Anything
Poonam,
you would like?
so Poonam, the APY you mentioned, it is that's right that 5,000 pension is there, but the thing is that 5,000 you're getting can be taxable at that time. So 1,000 to 5,000 is there. So but it comes as a part of your income as well. So that's also people need to consider that right now when you're taking, because I think there's a benefit of 80cc for APY now. and then when you later on get as an income, you get, it can be taxable as well. So like similarly, we spoke about mutual fund in our previous sessions. There is that market linked investments are done in your NPS as well, like tier 1 and tier 2. Tier 2 is mostly like a mutual fund, you can withdraw any point of time, there's no limitations of time bound there. But for tier 1, you can only withdraw at the age of 60% of the amount, the lump sum amount. You can't do more than that. So there are restrictions in NPS as well. And NPS is like, you can invest in equity, debt, depending upon the market where the tier 1 is, where they're investing. So it's a market, it's a government based, government who does it for you. And you can choose where you want to, like, you can choose a percentage over there for how much is the equity portion and how much is the other portion as well.
Yes, and
Yeah. Poonam, we had prepared one table, right? You had prepared a table where you wanted to show everything to them. You wanted to show that?
Smita, that it's not easily searchable now. Right now, if you would like to share, but meanwhile you're searching, let me share one point that's common for all. That's
Yeah.
any retirement things that you plan for, the employee provident fund, the lump sum amount that you got, any lump sum amount that you get at the time of retirement is not taxable. But any pension you get, whether it is from EPF, whether from NPS, and whether from Atal Pension Yojana, any amount which you receive as pension at the latest stage of your life, then it is taxable as income from salary. Your salary income, it is treated same as a salary income.
That's because when you're making the investment for it, you've already taken the benefit of tax in your earlier years. That's the reason when it comes as an income in the later year, you're taxed.
Absolutely.
And so we've covered few aspects of financially aspects of the retirement, but there are other things when you talk about retirement, like how comfortable are you with your insurance, health insurance, being a senior citizen. So see, there are two kind of citizen here. One is at the age of 60, it is called senior citizen, and after the age of 80, it is the super senior citizen. So when you either of the brackets, the benefits differ, but once you cross 60, there are a lot of benefits of being a senior citizen. So look everywhere for the benefits you have, whether it's your railways, whether it's your whether your interest rates for your FDs, RDs, etc. So senior citizen gets a different rate, and the tax slabs are different. So make sure that you're aware of all the benefits as a when you're planning for your retirement and whatever age you're retiring. So if it's earlier than 60, then accordingly plan and put your money in the investment. If at the age of 60 you're doing it, then take advantage of your senior citizen as well. Whether you retire or not at the age of 60, the benefit of senior citizen you can take anyways. And there are a lot of things which we would like you to consider when we want to talk about insurance, will, and all of those things.
Uh, yes, health insurance, you just discussed that it's very important to take care of the two things. The one is the health, of course, maintain it, and the second is health insurance. And the another point is will. Will is a very beautiful thing that I learned yesterday from Smita. That it's not only that we are planning for retirement. It's not about the will and the money. Other aspect that we should declutter our things simultaneously so that we don't leave the garbage for this word or and for the next generation. And after us are that is the relatives or the dear one don't get worried, or they don't get mm, hassle just because of the money we left and we don't inform them. I have seen cases in my personal life where people have a lot of money, but they have made all the insurance, etc., but they don't inform their family that we have taken this much of insurance. We have so many bank accounts, and later on their family suffered a lot. So it's important, to the extent you are comfortable, share with them, but at least tell to one or two reliable persons so that after you, other person, your dear ones don't suffer because of that, and that money, your hard-earned money, don't goes to the hands which ultimately go to the government. Don't do that. So just plan for that. Documentation is very important. Like keep all the Planning means the planning at all phases. If you're planning for retirement, see your NPS documents are ready. Just check your EPF account once in a year. What are the other things? Checks maybe periodically. That's maybe you can check that's is my current plan for the retirement and the my goal is matching or not, the both are in sync or not. If it is more, then whatever surplus I have, can I do something now to enjoy my life? If I have short, then what other things I can do? I can earn from any business. I can maybe earn from a consultancy or maybe coaching or something else that you can do to make up that plan for retirement. So uh, and other aspects could be your insurance, taking care of your family members. For example, you have planned for yourself, you can plan for your closed one as well, said what all they need. And if you have some dreams about the retirement, like you want to retire at the age of 60 and you want to build maybe start an NGO for the school students, then just start talking to the people who have the same interest, so that after reaching at the age of 60 you don't think about that. But if you have planned for that and you have identified the people who will help you at that age, or maybe your senior, it can be anyone from the your known, then it will be easy in that journey. It will be very easy to transition in this retirement phase what you have longed for. So just enjoy, just plan all those small things that you have missed in your childhood, and that you really want to do at the earlier stage of your life, but you couldn't do that. Just plan all these things. Just jot down somewhere so that you don't miss that. If when you have missed your some hobbies that you have in your childhood, you can also plan for that in that stage of life where you have the full time. Your emphasis is not just to earn for the family, but for many just to be with yourself and to enjoy that phase of life.
Yeah, Poonam, you've covered a lot of things here. So probably another thing I wanted to add is there is something called reverse mortgage as well. So people who were getting aged and who don't have any siblings or any family, and they don't want to leave they don't know what to do with the house they have. Instead of giving it to their own family, relatives and all, they can mortgage it with the bank, and till the time, then they can get the money from the bank, and by end of their life they can give it off as well. There's a concept which is there. People, how many people use it, I don't know. And also it's better to free yourself up. So when you free yourself up, that means that you have a plan for yourself and you're not dependent on anybody for that matter. And as you mentioned, health is really important because health, if you half the battle is won if your health, take care of your health. And what I mean by taking care of health is being regular at your exercises, physical health, mental health, emotional health, intellectually you should take care of yourself, knowledge wise also update yourself, upskill yourself, so that it keeps you young at heart. And what happens is when you are young at heart and you are away from all those what you call diseases and all, it's easy to deal with anything which comes up to your in your life. And probably invest in those kind of things in the present, eating healthy food, taking care of your body, enrich your life so much, make your life so richer, not only in terms of your money, but also like a prosperity in time and abundance to yourself. And make yourself a priority now, so that by that when when you are aging gracefully, you don't feel the pinch of that age is impacting your bones, you're not able to do that. It's better to be well prepared for everything in life. So if you can and when you love your body and yourself much, you will take care of it really. So if you take care of yourself, then in the any age comes in or any problem comes in, you will sail through it. I'm not saying your life will not be a roller coaster, and definitely it will be. Sometimes you will have too much of time, you will have less of money, you have too much of money, less of time. These are all parts of your life. Each phase you have to go dip in those resources what's available to you maximum. So it's an age where you're earning too much, first earn, then balance your time. If you have too much of time, then you use that time for doing things which you were not getting time earlier for. So that's a balance you have to maintain throughout. So people think that retirement is only about having a PF or a gratuity and talk about NPS. It's not those three components. It's about looking at a life where from which you don't need a retirement from, basically living a life, fulfilled life, basically. So let's
Yes,
ask the audience if they have any questions. And
Even
So
if you don't
Kavya,
have
Pavitra, yeah. Yeah, Poonam, what did you say?
even if you don't have quotient, but you like to share your experiences with us, then um, it will be helpful to all the audience to learn from your experience.
I wanted to ask about this Atal Pension Yojana. So
Yeah.
this can be done before the age of 40 only, right? But
Yeah.
for that, we cannot be currently employed. Is that right?
No, no, no. It's nothing to do with employment. So I had it when I was not why I was employed. So I took it very early.
Okay, so anybody can do it. So it's like, and
Yeah.
then what's the difference between that and NPS?
So NPS is a huge amount. 50,000 is the limit. So you get an 80 CCD benefit of it, and you can invest in the various asset classes like equity and all. There are tier one capital and tier two capital over there.
Okay, so currently what I'm going for is tier one, and
Hmm.
the employer deducts 10%, but recently I heard that it has gone up to 14%.
I don't know about the exact percentage of it. I think it was 10% earlier. So yeah, you will have to check that.
Okay, so that's one, and then the other is, I think that one is still under new regime, right? But the other one that you can put up to 50,000 on your own into tier one, that is not under new regime.
Yes.
Yeah. Yes.
Okay, so if it's not taxed now, and same goes for the Atal Pension Yojana, right? Because even that is 80 CCD means, is it covered in new regime?
APY is not covered in the new regime.
Okay, then but it would still get taxed when it is received as a pension
Yeah.
later.
Yeah.
Okay. Now you're saying, right, like initially we have got tax
Yeah. Yeah.
exemption,
Yeah. Yeah. So
but
the
in
for
new
NPS
regime
it is
there is no.
yeah NPS it is there, but for this is not there.
Okay, and same for PF and all. I mean, or anything that we get as a pension later, but if you are taking as a lump sum, then there is no tax getting cut later.
There is a
Yes.
there's a cap. Yeah, there's a cap to it, and then for example, gratuity the cap is 20 lakhs. So there's a cap to most of the things basically.
Okay. But PPF is completely exempt. There is no tax on that at all.
Absolutely. PPF is totally exempt at the time of withdrawal, right?
Okay. Because that's not a pension. It's not coming as an income. You're withdrawing it. That's why.
Yes.
Yeah. Let me see
Yes.
if I can show you the table which we were trying to create. I don't know whether I have it in my desktop. Let me check. So this is a Pavitra. If you can see this is the table. The one is your EPF. You want
Yeah.
you can take a screenshot of it. So this is this is a EPF NPS gratuity. This is a table which we were preparing. So we thought if needed, we can show it to people if they are interested in knowing the calculations, because most of the people would want to know the knowledge rather than the calculations. So is it visible, Poonam?
Yes, Smita, it's visible.
So first one is about employee provident fund. Second one is about NPS. And for NPS, it is you're asking about the NPS. It is logged till 60. And in the tier one, tier two is flexible. Yeah, and withdrawal rules are also mentioned like 60 to 40%. So yeah, and then there is gratuity, there is PPF, and probably yeah for senior citizen there are new schemes also post retirement, but that you have to check with post offices and banks and all of those things in case you are a senior citizen or a super senior citizen. And there is APY, there is mutual funds also.
Smita, seems you forget to put it on your second system. Maybe you logged in from another system.
Yeah.
It's
So you can't see anything, or I don't know
I
what's
can
coming
see
in for you.
maybe voice is echoing. Maybe.
Okay. So that's what is there. Pavitra, you wanted any more information on it? We can send it to you. This, if you can share your email ID, we can send this to you. You can have a look at it, or you can take a screenshot of it. What I was sharing. Poonam, you want to add anything here?
I think we are good for today. But before that, let me check from you what's the topic for the next session. And
Next one is interesting. It is for the freelancers and self-employed people, the investment for them basically. So we'll be talking about what kind of investments they can do. Though we've covered all of those things in large, like as a topic of savings, investments, and other things. But this is specifically for them, so they what they can take it into account.
yes, the very interesting topic, that's those who are employed, but those who want to run their business and those who want to start freelancing and how they can secure their investments, the retirement, just we discussed, and the other investments, while not a compulsory deduction from their account. It's a interesting things we will discuss in the upcoming session on Monday.
Yep. Poonam, what we've also done, like in our group, what we've done is we've tried creating a community for old people. We call it as Oldie Goldie. It's still to be named. So what we are trying to do is people who are senior citizens, so about 60 plus and all, we're trying to bring them together so that they have a community where they can share their experience. Some people are very active, some people are have health issues, some have financial issues, different kinds of people, so that they bring their own experiences and how they can leverage on with their own community. So we're trying to start this by end of this year or first week of January. So one of my friend whose name is Ginny and me and Ginny are going to be the co-founder of it, and we're starting that. And she also had to join this session, but she did not join. I thought if she had joined, she would have explained it a little more better. So we thought that that's a retirement club, or basically people who are in that zone where they think that what should they do next? How do they live that life? When they have a community, then it is very easy. Like we have a community here, we talk about it, people coming from breaks, talking about finance and all. We thought we'll create a community where we can talk about a lot of other things. The second innings of life, which is not work, but beyond work as well. So yeah.
Great initiative. Great initiative, Smita.
So yeah, this is what I had to share for today, and probably it's a good time to wrap up if we have no questions for now.
Yes, yes, Smita. And till the next time, have a great time. Just plan holistically all the aspects uh, and enjoy your life. Take care.
Yeah, so
Bye.
bye bye.